Okay, now, this panel was supposed to be moderated by Tayo Odunsi, but he has a replacement, Ayo, from North Court Real Estate. Kindly come up, thank you. And then we have Kehinde Ogundimu, Acting Managing Director, CEO, NMRC, Nigeria. And I believe Dr. Bashir Oshodi is here to head Islamic Banking, Sterling Bank. Is Bashir? Yes, I see Bashir. We're supposed to have Adeni Akinlusi, CEO, Trust Bond Mortgage, but I don't think he's here. If he has a replacement, I guess you can come up, but thank you very much. Okay, so let's continue that conversation around housing finance, the new face of housing finance. Thank you. Over to you.
All right, good afternoon, everyone. Pleasure to be here. So I think we'll just go straight into it. It's great to have you gentlemen with us here to throw more light on the issue of housing finance. So I think I'll just go to my first question, sir, Mr. Kehinde. What, in your view, are the policy or products that are required to improve, access to housing finance?
Thank you very much. My name is Kehinde Ogundimu. I'm from the Nigerian Mortgage Finance Company. So I'll talk about products to improve housing finance. I think one of the things said in the last session was affordability. How do you make things affordable? We have studies have shown around the world that one of the greatest impediments to home ownership is that equity contributions that people need. The standard is that you need to have 20% of whatever house value you want to get as a skin in the game. So what we at NMRC are doing in conjunction with the World Bank and the project administration team of the central bank is to establish a company which will be called Nigerian Mortgage Guarantee Company, so that for those who do not have that 20% equity down payment that they need to get into a house, they can buy an insurance for a very small amount, and then so that with an LTV, a loan to value ratio of about 90 or 85, which we even intend to raise up to about 95%, they will now be able to qualify and get into the house. So instead of you waiting for the next maybe 10 years or 15 years to save that 20% equity down payment, you can just get an insurance that will get you into that house the first year. And we all know about housing, or real estate in general. It is one of the most effective instruments for managing interest rate risk, because you are getting in at a high leverage and prices are always on the rise. Especially for a country like Nigeria, we have huge deficits, so prices are not likely to fall. You come in with high leverage because you are bringing in only maybe 5 or 20%, so you get all the upswing associated with housing. So that's one product we are working on. Another product that we are working on in conjunction with the family home funds is what we call the silent seconds. So these are silent second mortgages. So it's also similar to that one in the sense that you have your first mortgage, which is maybe 80% of the loan value, and then you take a second mortgage, but that mortgage is silent in the sense that you're not going to pay for it. You're not going to start paying for it until about 5 years into the future, by which time we expect, under normal circumstances, your income to have risen so that the burden doesn't change. So if I'm earning 10 million today, and in 5 years' time my income is now 12 million, I will now start paying down on those ones. But it allows you also access into the pool. So the lead time of having to wait, and then the price of homes keep rising, and then you can't get in because you save, and then by the time you want to go in, the prices are rising. We're trying to address those issues with these two products. So this is just two of the products. We still have a lot that we're working on, and we'll share more as we go along in this discussion.
I mean, I like the sound of what you're hearing, and I just remembered when Nigeria's, I think, was it ease of doing business or competitiveness ranking came out, where I think we dropped by one place. But when I went deeply into the report, it wasn't that we were bad. It was just that we were moving quickly, but everyone else was moving faster. You get my point?
That's
so
correct.
That leads me to a follow-on question on what you just said. How quickly can we expect this to go live, and how many people are we hoping that this product and these new arrangements will influence?
So the Mortgage Guarantee Company, the initial plan was to make it go live before the end of this year. But we had some one or two challenges here and there. So we're very hopeful that before the end of the second half of next year, that will go in force. So you'll have that product that people. We're working with some consultants from Canada on that project. They'll be here next week, to finalize a few things. So hopefully before the middle of next year, you'll have a product that Nigerians can get at a reasonable rate that will grant them access with a lower loan-to-value ratio into their own homes. The other one is something we are working with the Nigerian, the family home funds, which is a silent second mortgage. That we don't have a timeline yet, because we're still working out the maths and all that, but it's something that will also come on board very soon. The government is also committed to making that happen quickly, so we believe there will be traction on that in the very near future.
Just taking a few notes because I know when we started today's session, we discussed the issue of Nigeria's housing deficit, which the most popular number, everyone has in their minds is 17 million. What kind of financing do we need to significantly reduce that deficit? What kind of financing do we need to make that work, to make it happen?
So it's enormous. So it depends on how you look at it. So if you look at 17 million and then you do maybe an average of 5 million or 10 million, you're talking about trillions, Well, that's just the demand. But if you look at the effective demand, it may just be about 4 or 5 million. So I think we should start with the low-hanging fruits, So of those 4 or 5 million, which one can we address? You understand? What's the capacity of the capital markets to provide the funds that we need for that, And then sometimes you just need to kick the wheel in motion and then it starts spinning faster and faster. So we shouldn't look at the total thing that we need because we don't even have the capacity to supply that immediately. I don't know of any company that can build maybe 100,000 houses in Nigeria at the same time. So I think the sooner we start, and then you get the engine rolling and all that, then you start seeing traction. So the amount we need is enormous, but it doesn't mean we need everything now. But let's start with whatever we have now, which I think we can get from the debt capital market through the pension funds.
Fantastic. It's just good that you put that word out there because once we can get the ball rolling, I am also confident that with the right processes and structures, we can hopefully see it replicate itself. Okay, I will let you take a breather. Let me move on to Mr. Bashir. So good to see you.
Yeah, thank you.
He's with Sterling Bank, as we mentioned earlier, and he plays in the alternative capital space, Islamic financing and what have you. So I have a question for you. In fact, some experts gave me some questions to ask you. So, what are the parameters to accessing, the alternative funding, the Islamic funding that you have for affordable housing? What needs to happen? And I need you to explain it in as much detail as you can so people who are here can go. He has given us deadlines. He's told us that by half year next year, we should expect 1 or 2 products. So, we know his office address, we have his number. So we'll be sending you emails to say, sir, what's the update? So over to you.
Okay, thank you very much.
Yes.
So let me give you a quick description of non-interest finance, or we'll call it Islamic finance globally. So it's only in Nigeria we call it non-interest finance, right? Basically, we do equity and debt. So conventional banks don't do equity. When you talk about equity, you can have perpetual equity and you can have short equity. So it means that on the supply side, you can actually look at a construction company or real estate developer and say, I want to take 3 billion worth of equity in your company, build so much, make them affordable, right? If you can build so much and the capital or the funding is patient, it makes it a lot easier for you to sell cheap. It's quite different from when you go to a bank and they say, oh, bring performance bond, bring a lot of other things, and then the interest rate is going to be, say, 25 or 29% per annum. It's impossible to use such hot money to do real estate. So the money must be patient. And that's when the Islamic finance, you can take equity position in the company or equity position in the project. So you can alternatively say, okay, I don't want to take equity position in your company. It's a one-man business, you want it protected. However, you can see there's a project you're building. You're going to build like 1,000 units. Each unit is going to be going for, say, 15 million per unit or 10 million per unit. A bank, a non-interest bank, can actually take equity in that project. It means that that equity allows the builder over the 18 to 24-month period to build patiently without any interest accrual or any form of tension to say we have to pay back, and so because of the unit to go up. So that way you can address a lot. That's on the equity side. So the equity is unique. Equity is such a rich blend that you can toy with it like a clay, right? Now, on the debt side, there are various forms of debt under Islamic finance, under interest finance. Some of them are patient. One of them is what we call the agency fund. I'm trying to avoid the Arabic terminology to keep it simple. You can actually say, this project is going to take you 18 months. I'm going to give you debt, but the money is such that you're going to build and sell for me and return it. Again, it's going to be patient. That's what you really need. And then you can keep the cost of funds very low. How do you keep the cost of funds low? Two things. You can, amazingly, for the industry, we're able to attract foreign funds. They're quite cheap, much cheaper than what you get in the conventional space. And the conditions are a lot more relaxed, and because of that, you can actually get such funding, put it in real estate. So if you can get construction costs much lower than what you ordinarily get in the regular banking industry, then makes it a lot easier to do affordable housing. There are other concepts under debt, like buying and selling back or buying and leasing. Again, you can make them stiff and you can make them relaxed at the same time. That's on the one. On the other hand, can you imagine if we have to issue, say, on the supply side now, so NMRC can issue mortgage-backed bonds. Now they're trying to issue mortgage-backed sukuk. Sukuks are bonds, but backed by assets. On the supply side, can you imagine in Nigeria, if we say let's start to issue mortgage sukuk, right? Or let me say property development sukuk or real estate sukuk. It's very common in the Middle East. You do this sukuk for a long time, keep the pricing low, give incentives to people buying. A lot of financial institutions will not really buy, considering the fact they don't want to invest in real estate. But if it's sukuk with some kind of guarantee from a reputable institution, local or abroad, it makes it a lot easier. So that way, if you get cheap capital, you can build a lot, for the affordable space. And again, for the social housing sector, you can do a lot in that area if you're able to attract this type of fund. So the kind of fund you attract and you put into real estate matters a lot. And so that becomes a major concern for non-interest finance. But let me talk about one quick example. We did a project in Abuja, but we financed about 200 units out of over 800 units. What we did was that they're affordable. The cheapest, the most expensive is less than 20 million naira. The most expensive, right? Yeah, 200 units. And we said, okay, all the off-takers, right, don't even put down equity. As you collect salary over the construction period of, say, 24 months, you can be putting down your bits. Just be putting down your money over the construction period, so that you're able to build your equity over a 24-month period. And so by the time we book the assets, which is going to be maybe December or January this year, so we've not even booked it. And people have been contributing. Meanwhile, we have given the developer 2 tranches of cash, built, and they built. They were just rounding up. That makes it very convenient. Again, it was the pricing on the mortgage. We have to create a mortgage for them. Yeah, NMRC wants us to refinance our mortgages through them, and they want life insurance, which is always about 1%. So for us, by the time we put down 1%, we're still able to do everything at 21 or even less. What we're trying to do for next year is to make even much less than that, including all inclusive of every other cost that I can imagine. No extra what they call it, processing fee and all of that. So we try to avoid that under Islamic banking space. Again, can you imagine where we get to a point where, for example, we create mortgages at, say, what I call the 15-15-15 formula, right? 15%, in terms of pricing, percentage, when you say percentage, it's mathematics, right? We do 15 years, and you do probably 15% contribution. When you do that, you attract a lot of people into that space, and that's one thing we're going to start to do very shortly.
So, I've heard a lot that you've. Thank you very much. You've said a lot, and I find it very impressive, especially the bit. Even our chairman here was nodding when he had 200 units, and the most expensive is less than 20 million. 20 million is still a lot of money, but it's a step in a very good direction. But that takes me to my next question. why are we not having more projects like this, and what do you think the issues are? Because, I mean, if this is available, then why aren't we having this going on simultaneously in 10 to 20 different parts of Nigeria?
You know, in banking, you have sectoral limits. So, assuming your capital is X amount, you know, you can do probably real estate of certain percentage. Don't forget, you also want to do oil and gas, you know, trade, you know, make your money in 45 days. So if you put 7 billion right now in local oil and gas transaction, make your money back in 45 days. Roll it over and roll it over. You make a lot of money.
Let's bring the money back.
Yeah, you know. And then don't forget, you also want to do leasing. So, I mean, you can buy 200 vehicles for a company right now, and it's have to pay their rentals immediately. That gives you quick income. So because of sectoral limits, you're unable to just put all your money in real estate. And the mortgage banks, the capital is rather small, 2.5 billion for states, for those with state licenses, and just 5 billion for those national licenses. It means they can do so little, right? So we need to have either mortgage banks that will have a lot more capital, so they can do a lot more. And again, they can also structure certain transactions off their balance sheets, which allows them to create more assets. So until we do that, I mean, so right now in Nigeria, assuming all the banks in Nigeria in the last 30 years, assuming they have 100 naira, right? They've only given out 1 naira for mortgage in the last 30 years. So it means they're ordinarily not attracted to it because they feel other sectors give better return, and of course, quick return for that matter. Right? So these are the issues. So you can imagine if you now have a mortgage bank that is based on non-interest banking concepts, that has got so much capital. That's it.
Extrapolate how far.
That's it.
You look like you were vibrating. You wanted to say something.
No. So I agree completely with the sectorial limits. So this is what's been holding them back, you understand, because it's also a risk management function. You don't want to be exposed to one sector of the economy and then it goes down and then you go down with it. So they have to manage how much they put here and there. But most importantly, though, is the problem they had in the past was that there was no secondary mortgage market to even take off those assets that they were creating. Since we came on board, for instance, with his own bank, we've done some billions of naira in taking over those assets. So in the past, those assets, they will have given out loans, maybe 1 out of 100 naira, but to remain on their books until the loan is repaid back. But with coming into being of NMRC, we are buying off those things and giving them that liquidity to be able to create a new one. So if you had given out 1 naira out of the 100, he said, immediately we come and give you 1 naira back, and then you can plow back that 1 naira into mortgages, and then we come back again, and so that cycle just keeps moving. So the 1 naira, instead of it remaining on the books for maybe 5 years or whatever it used to be, now it remains on their books for 6 months, because after seasoning, we can come back and then pick it up and then go that route. So sectoral limitation, they had that, but with coming into being of NMRC, the cycle of transaction is much faster. So we expect to see this grow more and more.
Let me just add to that. So you know what happened in the U.S.? Fannie Mae and Freddie Mac. So in the case of the U.S., they created these institutions. They gave them money, call it incentive if you like. You know, they guaranteed these mortgages, or even the institutions themselves. Government guaranteed them, and they also allowed them to give mortgages at very low interest rates. At least the prime ones. You know, of course, they went into subprime mortgages later on that affected the globe, you know, the world. Now, can you imagine if you have such extra incentive to real estate? I mean, what percent of our budget goes to housing? Very tiny, right? It's too tiny. I can't even say it out, right? So can you imagine if you flood money? So in the case of Federal Mortgage Bank, yeah, they wait for National Housing Fund money, but that's just a source of money they should use. They should ordinarily have other sources of cash flow into that organization. And again, yes, and then MRC, they do bonds and all of that. They get a lot of money. Now we need the government also to give some kind of incentive, some kind of guarantee. Again, the private sector can handle it. I feel strongly that the like MRC can even do such. I was discussing with the MD because we sat down together and said, can't you take other monies, you know, from wherever, equity from the Middle East. You know, you pump the money into NMRC, you reduce your cost of it because you dilute your total funds that you have. Yeah, there's FX risk. You know, there's a way there are ways of mitigating that risk. Have a lot more funds, right, and then be able to give it out. So when you have a lot more fund that is cheap and is long term, that becomes very easy for everybody. You know, so yes, the money is there, but again, you know, I mean, a bank will ordinarily just say, oh, let's just keep the money in T-bills, no risk at all, make a lot of money. Why do you want to? There's some banks in Nigeria right now, over 50% of their total liability, their total deposit, over 50% of it is in T-bills. Because there's no risk, and they get a lot of money, and they make profit for the shareholders. So who cares about real estate? So those are some other issues that I should mention.
Yeah. So as he rightly said, those are some of the things that we're also looking at, blended source of fund. But him and I were discussing, and then one of the risks associated with that is if you get these cheap funds from outside, how do you hedge the FX risk associated with such? Maybe that's an area where the government can come in, maybe through the CBN. They've done something similar to us and say, okay, instead of you hedging these at commercial rate, which might be even double digit, we will come and hedge it for you at something that is very small. So if we can get that, and then you blend your funds, it will really reduce the cost of funds to you, which you can then give out.
I'm going to allow you to respond to that, but just walking in, I spoke to a few colleagues who've been in the industry, some of them 30 years. And, they told me point blank that, considering the magnitude of the problem that housing finance has become.
I think we need to declare a state of emergency in the real estate sector. And one of the ways to address that would be to say, okay, let's just have this massive injection of funding to this. And then we'll see, at least that will be a major catalyst to kickstart this enormous movement that we need in this industry.
I know you want to say something.
Yes, so hedge against FX risk. So basically, can you imagine somebody say, take $200 million for starters, and what we can simply do, which we have discussed that with regulators, is to say, Central Bank, take this $200 million as interest-free loan. Take it as interest-free loan. Give it back to us in 3 years' time. However, give us Naira as interest-free loan. They take the risk of that $300 million. So the risk that you're going to be exposed to is the profit margin you have to pay to the owner of the funds, where it is debt. Where it is equity, that risk is almost eliminated, So that way you can hedge very quickly and very easily, right? I just thought I should mention that quickly.
Okay, just a question here. So we've spoken a lot about mortgages, and I know they alluded to that in the last panel. We know the rates are high, and a lot of people really cannot afford, mortgages as they currently exist. What are our thoughts, our ideas around making mortgages easier to access, reducing the rates, and things along that line? What do you think we should start to look at to make these things affordable?
So the key driver of mortgage interest rate is what the government is borrowing at, you understand? So until we have macroeconomic stability, you can't really address interest rate. So if you have your money and you can give it and buy treasury bills and get 12, 13%, why would you want to take a risk on something that is not AAA, you understand? So we need to get our house in order in terms of the macroeconomic stability, you understand? I know one of the things that the central bank is trying to do is they're saying, okay, we want to protect foreign investors, we want them to come in with their money. And the only way so as to protect Naira stability, and the only way to do that is to make the interest rate attractive to those people. So you keep it high, they bring in their money, and when you have that money, you have exchange rate stability. So it's a catch-22. You are having stability of the exchange rate at the expense of high interest rates. So which one do you? Affordability is a function of the interest rate, it's a function of the tenor, is a function of the cost of the housing, and is a function of also the earning powers of the individual. So how much do people earn? Are they paid well? Is there a living wage and things like that? So you can't walk, there's no one silver bullet. There are 4 items that you need to address, and you have to address that. You have to address all the 4. So interest rate is just one of them.
Okay, sorry about that. We're just trying to make sure we still have enough time, because there was one question. Okay, there was a question that someone asked me, and I want us to throw our weight or our thoughts into this question. Now, it's a bit Nigeria specific, so please bear with me. Recently, our minimum wage was increased to a certain amount. Let me not put the figure out there. Will this have any impact on an individual's ability to afford homes? Now, there's an obvious answer, but I want to hear your thoughts behind that.
Okay, let me take it very quickly. I mean, one of the sessions that we had there today was trying to differentiate between affordable and social housing and all of that. In Nigeria, 50% of the adult population have no income. So 50% of the adult population do not earn anything. So in reality, they cannot even get affordable housing They can only get social housing if at all they're going to get housing at all. That's 50%. That's about 100 million people, adults, right? Now, another 30%, they have income, but they work for small businesses, one-man businesses, government, 30%. Those guys can struggle, some of them, half of them, can struggle to get cheap houses of below 10 million. Now, 20%, they are assumed to be high income. Out of that, the bulk of them are still in the private sector. I work in the bank, right? We try to sell some houses sometime. Out of 20 million naira, a lot of people working in the bank, middle income guys, mid managers, they can't afford it in the bank. And they belong to the 20% on top. In Nigeria, less than 1%. And according to a final report, 2016, they earn less than about 200 naira per month, right? Less than 1% of the population. So whatever increase you have right now is insignificant. It's of no effect. So when you look at that data and the reality, you start to realize that even when you build houses of 20 million, a lot of people still will not be able to afford it. Not even people in banking or telecoms, maybe the oil and gas guys. And so it's difficult for a bank to give mortgage to somebody in another bank, considering the fact that, you can even lose your job in another year or another month. They want to give the oil and gas guys because they feel, these guys are going to get some good benefit where they live. How much more the informal sector. So it's not going to be of any serious change.
I don't think it will be it won't make a significant impact, but it will move the needle a bit because earning maybe 18 and then you're earning something higher will, if there's no effect on inflation, has increased your capacity to at least pay better. You understand? So I think there might be, but it will be very minimal, and it's still on the social housing to the informal sector. It's not as if it's going to make a significant change, but at least it will make a little difference, just a little.
Because it just kept going with the figures, and I was wondering, oh my God, when is it going to stop? All right, as we begin to round up, I know a few developers have tried to approach, your organization and a few others. I have to be completely transparent here, and a lot of them get turned down. A lot of them, get a no. We can't give you financing for this project. My question to you is, what are the things you look at and how can they better prepare to access this funding, especially when they are coming with affordable housing projects and, of course, social housing projects?
Okay, so first and foremost, in my bank, we try to align with NMRC on the writing standard, right? So if the NMRC wants to do 50 million and below, we just say, okay, no, for us, it's going to be 40 million and below, right, to start with. So if we bring in anything on the table that is above 40 million, we're not interested, right? Because it's difficult to sell if the person defaults, right? So the other part is we have a project, we need to finance on the supply side. On the demand side, you have the off-takers. You see, the banks don't want to take risk with developers. There's a lot of stories. We're in the middle of one right now, loads of issues, right? So you want to fragment your risk with several off-takers. So you can imagine, so the 200 units I talked about in Abuja, at some point, somebody came and said, I don't want my house anymore. I can't afford to pay anymore. You had a list of 10 people waiting to take it because it's so cheap, right? Every day, somebody turned it down, so I've lost my job, I don't want it anymore. But there's another person that can take it. But meanwhile, in Nigeria, all the banks have bad debts, non-performing loan, mortgages, of at least 2 billion naira minimum. All the banks, right? Now, that's because it's so expensive that I can't even sell them. If you've got a house in Banana, somebody's bought the house, 150 million, the guy defaults, you can't sell, right? So for us, anything above 40 million, we don't want to deal. And then we want you to bring your off-takers, even if it's not 100%, even if it's just 40% or 50 or even 60, worst case, between 40 to 60% off-take. If you've got these off-takers, we're sure that the risk is better, is better fragmented, because you can create, under no-interest banking, you can create a forward sale or a forward lease mortgage. It means that even when the houses are yet to be built, you just to fill up the land with sand, or it's bush, you can actually create a mortgage like that using different kind of instruments. So we can do also, but bring the off-takers so we can fragment our risk. Now, when you're bringing the off-takers, again, you want to look at the cash flow, the person's income. If you've got staggered income, or if it's informal sector, I know a lot of banks have problems with that. However, all we have done is to reduce the debt service ratio to say that, okay, if you earn 100 naira, we don't want to give you facility more than 33, I mean, you don't want to pay more than 33 1/3. However, we're saying the husband and wife can come together, get a mortgage, and we can make you pay as much as even 50 or even more than that. When you team up. So we decided to allow such flexibility, and then rentals. If you pay early under no-interest banking, there's no penalty for it. In the conventional space, when you pay early, you get penalized. So it's flexible enough to allow loads of people have their homes.
Although for NMRC loans, though, there's no penalty for early payment. So that's one of the things. Because the way we issue our bonds, we also have a put option on the bond, which we can put back to the bondholders. So anybody who takes an NMRC conforming loan, that's been refinanced for NMRC, there are no prepayment penalties. I just wanted to let that out there.
All right, thanks for the clarification. So I'm getting indications that we might need to start wrapping this up. So I will just ask one question here. What are your thoughts or your reflections around the future of housing finance? How do you see it evolving in the next 5 to 10 years?
So I think just like you have prop tech, which is talking about how to sell, there's disruption everywhere now. You have Contech, which is construction technology. You have so many systems now. You have one in the US called SAM 100 that can lay a brick every 8.5 seconds. You have 3D printing. They've used that to build 2-story houses in China in 45 days. And you have the Australian system. So a lot of things happening on the construction side, Contech. We also feel that on the financial aspect, there's going to be a lot of changes, a lot of disruptions. One of the major problems is how do you access the credit risk of the person you want to give out a loan. So you have a company in the US now called SoFi, where they're using just your transactions on Amazon, your transaction on Alibaba, things like that. Non-conventional form of accessing your credit and making sure that even with those limited, artificial intelligence and all that, the kind of questions you are asking on LinkedIn, the kind of things you are looking on Facebook, it is now possible to get a very sound understanding of your credit profile and be able to give you credit. And the time for doing that is getting shorter. So we're expecting fintech to really disrupt this industry in the nearest future, whereby you're able to make quick decisions. It doesn't take months and years again to say, okay, I want to see your history for the last 15 years. I want to see your pay slip for the last 10 years. You're able to use artificial intelligence to access that credit and then to even process faster and make the funds available cheaper. So we see a lot of things coming in the future to just disrupt the banking or as we know it now.
And in your estimation, do you think we're ready for that? Do you think?
Sometimes you are not ready, and then you are just forced to adapt. But the best thing is to be prepared, and then just move along quickly.
Okay, let me come very quickly. Also, there's a book that compared the Chinese economy and the U.S. economy, and they found that the U.S. economy is based on demand, the demand-led economy, right? And while the Chinese economy is supply-led. So the idea is that oversupply everything, oversupply phones, oversupply water, houses, just oversupply, right? Now I'm in the same school of thought. So just oversupply for the right segments, and let the oversupply be within the town, right? So there's a place in Kano, they build 1,500 units in Kano, and there's nobody there. You don't have anybody in the estates. That's because they're so expensive. Yeah, there's supply, but not for the right segment. Can you imagine if you oversupply housing, all over within the town? You do urban regeneration. You take over units and just redevelop and make them cheap for the segments based on the pyramid I drew the other time. Now, when you do that, and you can get cheap funds to create that supply, and you can also create bonds or sukuk. Can you imagine if you have to do 300 billion worth of sukuk every year? Oversupply. When you oversupply, price will be forced down, right? Provided you are oversupplying for the right segments. That way, it's going to solve a lot of problems.
Okay, so we need to get ready for the disruption, and then we need to supply more. I think with our deficit at 17 million and counting, I think a strong supply hand is needed. So
let's bring in the audience. Does anyone want to make a comment? I know there's a gentleman here that.
Thank you very much. My name is Matthew Baden. I'm the publisher of Property Broker International Magazine. The speakers, I must confess to you, I'm highly fulfilled from your analysis and submissions. You are just wonderful. I just want to add quickly. I believe wholeheartedly we cannot get to our destination if Nigerians cannot live as a Nigerians, like what other people actually who travel abroad don't understand about social housing, as you actually talked about. But the truth is this: even in the banking industry, even the bankers, some of my friends, they can't even get loan for them to even actually live well. And those in the government sector, we're talking of 30,000 minimum wage. I don't know how we are going to do it. I don't know the miracle we are going to actually formulate for people who earn 30,000 naira to have home in Nigeria. Now, the question is this: what is going to be the right strategy to adopt for those people who are earning, for example, even 50,000 naira, 70,000 naira, who live in the rural area? For example, people come all the way from Ogun State. How can we solve such a bottleneck in Nigeria? Number two, if you compare the infrastructure decay, whereby we don't have rail system to transport people from, for example, people that live in Makoko and the rest of all those rural areas, they wake up as early as 3 a.m., 4 a.m. in the morning and start coming to island for work. Just it took them about 4 hours to come in and 4 hours to go back. That is, we're already losing human capital. The bank, I know before you even access loan, they will give you conditions you cannot even afford to go and bring your great-great-grandfather for you to be able to access it. But the truth is, government have a very vital role to play. But how can we formulate this policy and translate it into reality for Nigerians to have a sense of belonging in terms of housing? Thank you very much.
So I'll start, and then my colleague will join. I think that there's so many pieces to this puzzle, and then so there's no silver bullet. One of them, which we are addressing at NMRC, is tenure elongation, foreclosure law, and things like that. But one other elephant that nobody talks about is our population explosion. So you also have to look at that. Is it even sustainable? Because it has impact on the needs. So if people are still having 7 children, 5 children, and things like that, that's a major problem. That's not even a function of just your income. So if you're earning 30,000 and you're having that number of children or that large family, that's a problem. So there's no, as I said, no silver bullet. So many things have to come together. But the good thing is that at least we are beginning to address them one by one. But like anywhere in the world, whether be it in the US, be it in the UK, be it anywhere, there will always be those that will not be able to get a home. So for those people, government must now come in and say, okay, do we provide social housing, and how do we go about that? So you need government intervention in such areas. But let's even look at it's a huge problem. So I think we should start with the low-hanging fruits. For those who are in formal employment and earn decent income, can we even meet their needs now? How do we meet those needs? And then you now start going down the pecking order from there. And that's what I think we should look at it. So it's a huge problem. I completely agree with you. But you don't want to tackle the biggest problem at the onset. You want to get some traction, and build momentum and begin to track that. So, and that's what I think all these we are doing. When the puzzle fits together, then we're beginning to see the results.
Okay, very quickly. The chief economist of Price Waterhouse mentioned this earlier on, but again, in 20 years' time, our population is going to hit 400 million. The problems will increase, poverty will increase, everything will increase. Housing needs will increase, deficit, everything will increase, unfortunately. Now, so a lot more people will have homes, right? So for the people that earn so little, they live in those other areas, it's going to be a function of how rich the country is to be able to give them houses. The reality is that the poorest people will live in Nigeria in 2050. The poorest people by all standard will be living here. So that means that if there are no serious policy change, you don't have serious changes at this time, it means that the result you're going to have 22 years' time will not be different. In fact, it will be worse, right? So what then needs to happen is just like my colleague mentioned, maybe we should start with those that are even earning something. They're earning something in other countries around the world. They've tried to solve this problem. So a lot of incentives. There are several kinds of incentives. Is it land incentive, interest rate incentives, rent incentives? Often, how do you start to give them incentives? Again, a lot of collaboration between private and public sector will be required. So these incentives must be put in place now. Again, some of us are working closely with Lagos State government with the 10-year master plan. So actually, I was a part of the initial draft that they did, And we already put down the strategy. So these are the things that we need to do. So at 10 years' time, we're going to be fair, not fine, but fair enough. Of course, also dealing with issues around the kind of support infrastructure that we need. So we've already drafted something. We're hoping that the new government will allow implementation, or for us to blow it further. So basically, it's not just about some theoretical document. It's a document that talks about how to finance every aspect of that 10-year master plan, including social housing, infrastructure, urban regeneration, and all sorts. Everything is embedded. So when we have that, it then means that you also need a team of people, just like they did in New York 70 years ago, right? You had a team of people. They will draft the document. They will also implement the document. So you have a group of what they call in South Korea embedded autonomy, or Japan. You had a team of the best minds. So the draft document, they also implement. By embedded means that they're close together. Autonomy means that they have the right to implement. Until we start to have such serious-minded people sit together, I don't see any serious changes in the short term.
Okay, one more question over there. Perfect.
Thank you very much. Good afternoon. My name is Holger Adam of Clifton Homes. Thank you very much for this very enlightening debate. One thing that I would love you to shed further light on is how to integrate the members of the informal sector into the housing finance environment, for them to be able to access finance, to become a force driving the demand and enabling more supply in low-cost housing.
Okay. So I don't know if you were here earlier. My colleague had talked about some of the underwriting standards that we have put out as NMRC. So one of them is for the informal sector, because we realize that almost at least 60% of the Nigerian populace is in the informal sector. So for those, how do you access their credit? So we're putting different guidelines and saying, okay, these people will not necessarily have maybe a FICO score or things that, people with regular jobs will have. But can we look at his bank statement? Can we look at the kind of transactions he's having? Does he have children in school? Can we go to the school and ask them, does he pay regularly, and things like that? So we're looking for alternative ways. In fact, we have finalized alternative ways of accessing that person's credit and then his ability and willingness to pay. So we already have that in process. It's been approved by the central bank, and then it's just now for the rollout to start happening, so as to bring in those who are in the informal sector into the formal sector of the economy, because it's a huge percentage, but we are cognizant of that, and we have that policy or the underwriting standards in place to address those.
Okay, thank you. Yes, I agree with that. So we have lovely policy. I was also a part of that policy, right? It's interesting. Now, practically, banks are like, okay, why should I give money to these guys and then go pay me back? So this is what they did in China. They look at a community of people. They don't have jobs. They create jobs for them. Maybe some manufacturing outfits. Just make something. Produce something. Chairs, bottles, right? Now, when you're able to produce something, you start to earn income. When you start to earn income, they can afford to rent a house based on some rental subsidy and start to live a normal life. And when your income increases because the company is performing better, you can now start contributing, maybe having your own house, getting a proper mortgage, right? Now, what they've done is that within a 20-year period, they've used that method to empower communities, right? They make sure that they got something they're doing. Again, I mentioned the fact that 50% of our population are doing nothing. They are earning nothing, right? So it then means that the first thing is to think backward and say, how can we provide opportunities, to communities to be able to earn money in the first place? It's only when they earn money that they can afford to get to a small place, Or how can we have industrial estates? To say, okay, everybody here just produce bottles, right? Bottles, right? When you produce this, you're going to be able to earn some little amount. You'll be able to pay small rents, and then over time you can start to expand. If you don't take care of the income side, then nothing's going to happen on the ownership side, or even to maybe to rent a house.
I think his
For the informal
question was
sector.
not on those
On the
who don't
informal
have
sector.
job. It's on those who do not have formal jobs. So that's the one we have addressed with the underwriting standard. So they have a job. I'm a mechanic, for instance, or I'm a plumber. He's making money, but he doesn't get a regular pay slip. He doesn't get these things. So it's difficult to access that kind of credit. So we have devised other means of accessing such credit. It's different from somebody who doesn't have a job completely, which is the model we are talking about. So both sides are being addressed, just to answer your question.
Okay, so just to add up here, so the guy actually earning that little stuff, because the banks, the money is expensive, right? So practically, I'm the bank, right? Practically, it's also difficult to give out mortgages to people working for a one-man business. It's so difficult, right? Yeah, so you have a job, working for a one-man, the guy can sack you anytime, so you cannot even get, so it then means that how can you help that person increase his income, right? Do you give another, do you look at his wife and say, okay, you can take this micro facility and expand your business so you can have extra income and add up. So I agree with you. So the guy's income needs to increase, or else the banks will still not. Considering the fact also that a lot of the houses are building, in Lagos, nobody is building a house of 5 million, for example, and the person is living in Lagos. So it means all the guys with such income living in Lagos can't even get their own homes.
Okay, let's leave it there. Ladies and gentlemen, a round of applause for our moderator and our panelists. Thank you very much. Insightful. And in a way, that is the end of the affordable housing discussion, but it's not the end of the actual summit. We do have one more session. We talked around commercial real estate earlier, and we looked at the evolving demand side of commercial real estate. So now we want to change focus to residential real estate. It's interesting when you hear and people say that there's an increase in the demand for studio apartments and one-bedroom apartments. This is quite a social shift, I think, because we're very family-oriented in Nigeria. And I do wonder what's driving it. So this discussion is on the increasing and changing development pipeline in the residential sector with an uncharacteristically high proportion of units dedicated to studios and one-bedroom units. So what do we want to know? We are asking what's driving this development and to what extent has this demand been validated?